Stock Daily Insights. Your daily market compass.
Nvidia just made a significant move right before the August CPI data was released, and in the first 2 trading days this week, US stocks continued to show divergence. The Nasdaq has rebounded for 2 consecutive days, forming small bullish candles. Could this be the start of a proper rebound this week? Nvidia saw a surge after hitting around the $100 mark. Could this breakout surprise us? Tesla also had a solid day on Tuesday, closing above $226. Will it continue to rally, surpassing $245 soon? Meanwhile, Google remains weak, breaking below its yearly low. Is this an opportunity to buy at a dip? For those watching for the first time, don't forget to like and subscribe so you can stay updated with my content. Now, let's jump straight into the good stuff. First, let's take a look at the current market trends. This pullback started on August the 22nd, and we've now retraced to the 50% level. The market seems to have found some support at this level, with 2 consecutive small bullish candles showing long lower shadows. This indicates that the market is finding strength at this level, which is a positive sign for bulls. However, these aren't strong bullish moves just yet. If, in the next 1 or 2 trading days, especially after the August CPI data is released, we see a bullish candle close above the opening price of the last large bearish candle, that would be a strong signal of a reversal. This could lead to a more aggressive rebound, giving short-term traders the confidence to start building positions. By Tuesday, September the 10th, we observed that the Nasdaq CCI Commodity Channel Index had crossed back above -100, signaling a short-term oversold rebound. Since the market's decline from July the 11th to August the 5th, followed by a rebound until August the 22nd, we believe the bulls still hold a slight advantage over the bears. The fact that the recent pullback has held at the 50% retracement level is another sign of bullish strength. Looking ahead, we just passed the pivot point on September the 9th, which connects the July the 11th and August the 22nd lows, forming a downward trendline. This trendline will be crucial in the coming 1 to 2 months, especially before the election dust settles. We may see some resistance at this trendline, but eventually, the next bull market, or major upward move will likely break through it. In the short term, if the market quickly touches this trendline, be aware of the potential selling pressure and short-term risk. However, as of Tuesday, September the 10th, the Nasdaq has just closed back above the 200-day moving average. The direction of the 200-day MA is still upward, and we are moving faster than the last time we broke above this level. The key now is whether the market can form higher highs after higher lows to confirm a true bullish trend. Let's take a look at the Dow Jones. Over the past week in this one, the Dow has experienced a significant drop near the gap, but it has found some temporary support. We've discussed this upward channel before, and I believe in the short term, if the Dow touches the upper channel line again, or even breaks through only to fall back down, we should be cautious about the risks it might pose to the overall market. Now, let's dive into individual stocks. Starting with one of the hottest stocks, Nvidia. On Tuesday this week, Nvidia posted a bullish candle with the closing price slightly above the last bearish candle. That bearish candle from last Friday hit an intraday low of $100.98, which coincides with a key support area between $96 and $101, suggesting strong support from that gap. On Monday of this week, we hit a critical turning point on the 55th day of this market cycle. If you take the June the 20th high, you'll notice that the 34th and 55th days are symmetrically aligned, with the 34th day also showing a bullish signal. And now, on the 55th day, we saw another bullish candle, and the CCI indicator crossed above the -100 level on Tuesday, signaling an oversold bounce. In the short term, a key gap resistance at around $116-$117 is within reach. If you're using our classic stock analyzer tool, you'd see that while Nvidia closed above the 200-day moving average on Tuesday, it hasn't yet given us a strong reversal signal. The closing price was $108.10, just 2 cents below the long-term cost basis calculated by our AI tool, which suggests that Nvidia isn't entirely stable yet. This means that although Nvidia has fallen below the long-term cost basis of institutional traders, it hasn't closed solidly above it. Short-term cost calculations place resistance around $117, and with the current price below this level, that's where we can expect some pressure. The next significant resistance level, based on key technicals, is around $127, but for now, aiming for $116-$117 seems more realistic. Many investors are starting to watch Nvidia closely, wondering whether it can continue to carry the I flag. With Apple's recent product launch failing to generate major buzz, some are asking whether Tesla could step in and lead the iCharge instead. In previous videos, we emphasized how Tesla, after its July 24th earnings report, tested its gap support 3 times, each resulting in a pullback. However, on Tuesday, Tesla crossed above multiple moving averages, closing above all of them and approaching the gap again. I believe the 4th attempt to fill this gap will likely succeed, with a target around $245. We've been watching Tesla's resistance at $244.50 for over a month now, with the stock closing at $226. It's less than 10% away from hitting that mark. A quick move higher is certainly within reach. One thing to note is that Tesla looks technically stronger than Nvidia in the short term. Tesla's closing price is well above both its long-term institutional cost basis of $200.66 and its short-term cost basis, meaning recent traders have generally been profitable. Moreover, Tesla's MACD indicator is showing a bullish signal, with the MACD line staying above 0 for 4 consecutive days. If this continues, we might see further gains. Next, let's turn to AMD. Recently, AMD has seen a sharp decline, testing support around $132.90 before bouncing back. According to the chip distribution from our Hongli Cloud software, the next significant resistance is around $155. Super Cloud Brain also shows resistance at $153.46, which will be a key target in the short to mid-term. There is also some minor resistance at $144.70, but the $153-$155 range is where we should focus. Finally, let's look at Google, which has been consistently weak. Some investors are starting to take notice as Google has fallen from its high of $193 and is now below $150, breaking below its 200-day moving average with no strong bullish reversal in sight. There's concern it could fill the gap between $143.90 and $146.60. Despite these low levels and oversold conditions, some indicators are flashing buy signals. As of Tuesday, September the 10th, Google's RSI, Relative Strength Index, hit 27.7, which is below the 30 threshold for oversold conditions. According to the RSI's buy signal rule, anything below 30 is considered a buying opportunity. However, buying at such oversold levels requires patience, as it could be a setup for long-term accumulation rather than a quick rebound. We also shows that while Google remains in a long-term downtrend, recent institutional buying has picked up. This suggests that even though the stock continues to make new lows, institutional investors are quietly accumulating shares. For long-term investors, this could represent a potential buying opportunity. If a quick rebound happens, don't forget about the gap resistance around $163.20, which could be the first upside target. Thank you for watching today's market update. For more insights and daily stock market analysis, don't forget to subscribe to our channel and turn on notifications. Share this video with others who might find it helpful, and leave your thoughts or questions in the comments below. See you in the next update.